over where the world is going and take you along with me on that journey. Anyway, it's kind of an evening session, and so we're going to have a glass of wine because frankly I deserve it, and a fireside chat and tell you what's what. So, where are we in the crypto market? The most important thing about understanding crypto is understanding how to price it. And how I price crypto is essentially two major factors. One is global liquidity, and I use global M2 as the main understanding of that. And then there's and that's the cyclical element. And then there's the technological adoption, which is the long-term logarithmic trend. So let's deal with the cycle first. The cycle is what causes all of the pain. And I've been in this space since 2013, and trust me, I know pain. The first time I bought Bitcoin was at 200. It went up to, I think it was 1,000, then back down 85%, languished for a year or two, and then went up 10x from my entry price where I sold out. And then it came back down again after going up another 10x, then it came back down again. And I've seen these cycles. And at first, a lot of people correlated them to 95%, much like Solana is now, more on that later. And Bitcoin was down 85%. So we're seeing a less dramatic tightening because there's more people involved in the network, which is the growth of the network is more robust over time. We'll come more into that. So if you look at this chart here, this is the year-on-year global money supply versus Bitcoin. And you can see they're hugely correlated. Now, what's interesting, you see the tops of the charts, they're all missing because the scaling doesn't work. Because of the technological trend adoption, when you get the rallies, they tend to massively overshoot, even versus where liquidity is. And that extra is the extra trend that drives the markets forward over time. Now, every time we see these trends, the boom and bust, everybody shouts scam Ponzi, but that scam Ponzi phase is actually just driven by the monetary tightening cycle. Now, there is a lot of speculation in crypto. I get that because there is in most new technologies, we get that in technology stocks themselves. So right now, we are at the bottom of the monetary cycle. Going forwards, we know the Federal Reserve is going to start increasing rates at lower increments. I don't think they go much further than maybe this 50 now. Maybe they try and eke in another 25 and try and keep rates stable and then wait for CPI to fall below Fed funds rates, which I think happens March, April. So I think we're also seeing a lot of interesting things like the RSIs, weekly RSIs in Ethereum and Bitcoin are right down at levels that have always seen reversals. We're seeing it with on-chain activity. We're seeing it with minor capitulation. We're also seeing it with volatility. The 30-day realized volatility of both ETH and Bitcoin is at levels that always precedes the large rallies and the big reversals. So I've pretty much got everything in place. Is it possible to get some other down leg? I doubt it, unless something can drive bond yields high. And I just don't see that outside of a temporary blip because one of the inflation numbers or one of the employment numbers is skewed somewhat. So I don't see that happening. So I think we are moving higher. I think ETH based in June, and I've said that for several months now, in fact, since June when I started adding to my positions. The bottom of the cycle is always it's a scam, it's a Ponzi, all the media hates it, everybody throws shit at each other online, everybody's looking for blame, looking for scapegoats. We are exactly in that point now. It is ugly out there. And that ugliness out there is a real measure of where we are in the cycle. So we're at the despair and anger phase. And then we have the acceptance phase, which is the boredom phase, which I think we've rolled into, where prices don't do anything for a while and everyone starts getting fed up and moves on elsewhere. You can see artificial intelligence is getting people's attention. I think the hedge fund industry went up another 5x in assets under management. So that's what I'm expecting here. Regulation equals safety equals green light equals go. If that coincides with global liquidity, it creates fireworks. And the market has no short positions in. It has no real ability to short unless you want to use Binance. And nobody really wants to use Binance because everyone's a bit scared of who owns it, its opaqueness, even the audits. And so therefore, you've got very few shorts. and you've got a massive amount of money coming into the market. And stuff like ETH is deflationary the more volume there is. So the more volume there is, the less ETH's around, the more kind of reflexive in price it is. So I think we're setting up for a super interesting cycle. So I am been buying any money I can find. I'm throwing into crypto, literally in nothing else right now. I'm super focused. And I have been buying some NFTs. I'll come on to that in a bit. So that's where I think we are in the trend. And that's the cyclical element. Where are we in the long-term adoption trend? Well, the adoption trend, if you see this chart of Bitcoin, that's the log trend of Bitcoin. We're 2 standard deviations oversold. We're the most oversold we've ever been versus trend. And we're at the point of global liquidity turning. And we've got, if you believe in it, the halving. It's all coming into place exactly at the same time. Again, really interesting. But this time around, we get to build on top of what we built on from the last cycle. So that makes me very constructive overall. So here we are on the long-term adoption cycle where Metcalfe's law kicks in, and this is the thing that drives the exponential gains. Every time we get to this situation, we get new highs within about 18 months, maximum 2 years. In fact, within 3 years, even if you bought the 69,000 high, in 3 years, you'll see it go through. That's how it's always worked. Would it work this time that way? I don't know, but probability is there because of this network adoption trend that we're seeing. So I'm expecting 2023 to be a decently good year and 2024 to be extremely good year. If you remember, I said inflation, I think, goes negative. So therefore, we will see much more stimulus and growth will remain somewhat sluggish. So I'm again excited about where we're going to go. And we will go from 300 million users, and next time around we'll be at 1 billion users. And that trend rate of adoption just continues higher. So it's all to play for. And it feels always the darkest before dawn. And Christ, does it feel ugly right now. I mean, everybody hates everybody, and everybody's accusing everybody of being a scam. Bitcoin, ETH, Solana, etc. And 6529 made it very clear that NFTs are a much bigger deal than most people understand, because it's basically just a contract that can be used for so many different things, whether it's ticketing or artwork or music or insurance or derivatives or anything. So many things. There was a big philosophy about culture and the open metaverse that I think was incredibly important, because these are the foundation stones for the future. And 6529 has been one of the main proponents of that. That was a hell of a long interview, but really worth your time. The other all-time record long interview was Balaji. And Balaji talked at a broader level about these digital network states, and I've been calling them digital sovereign states. And I've been talking about this for many years, and Balaji's written a great book on it. And it explains how in this increasingly digital metaverse-driven age, we live in online communities, not just our physical communities. And those online communities can have their own system of governance, money, culture, all of these kinds of things, which dovetailed in really with what 6529 was talking about. And I think those are foundationally important interviews for you to watch. I think another great one was the interview with Ian Rogers, the Chief Experience Officer of Ledger. Ian has come all the way through the internet, particularly with music and fashion.